Welcome, Bitcoin fam, to the #1 Bitcoin pod and potentially my final live stream ever on YouTube. I'll explain why here soon. In today's show, I'll be breaking down the latest Bitcoin technical analysis as we're pumping back in the green. We'll also be discussing Tether moves $3.9 billion in Bitcoin to 21 Capital, Jack Mallers' new Bitcoin treasury company. Also, legendary James Wynn's second $100 million Bitcoin bet. He says they're hunting me. We'll also be discussing MicroStrategy offers an additional $250 million worth of preferred stock to buy more Bitcoin. We'll also be discussing retail is back, but not where you think, according to the BitGet COO. Also, massive breaking news. Russia's largest bank, Sber, offers up Bitcoin-linked bonds as money printer go brr. That's right. Max Keiser says, what if Russia suddenly realized they have a very high strategic advantage and can buy 1 million Bitcoin faster than the US and win the global hash war? It's incredibly cheap. The energy costs, extremely low debt of 14.9% to the GDP, ability to print your own currency, and issuing 100 billion in BitBonds is easy for Russia. Buy 1 to 5 million BTC. No problemo. We'll also be discussing the latest what's happening in the market. All this, plus so much more in today's live stream. But anyways, fam, if you're new to the channel, important to smash the like, subscribe, and ring the bell. And who knows, this may be my farewell. This could be my very last YouTube live stream of all time, as I'm currently under attack on the tube. Hence the important to make sure you're following crypto news alerts on X, Rumble, iHeartRadio, iTunes, Spotify. We're everywhere podcasts can be found, and it's only YouTube censoring and removing my content right now. It's an outlier. Only YouTube removing my content. They deem Bitcoin as an illegal Ponzi scheme according to their own messages in their email, and they deem this harmful and dangerous content. So like I said, this may be my very last YouTube live stream of all time, but we will resume on X and Rumble if the channel does get terminated today, which I'm anticipating. But anyways, today is pod episode 2011. I'm your host, JV, and today is June 3rd, 2025. Bitcoin pumping back in the green. Lots of bullishness in the news. So let's kick it off with our market watch, as we do each and every day. We got Bitcoin hovering above 106,000, up 1% on the day. Ether back in the green, back above 2,600. XRP, Cardano, Tron, all pumping and in the green. And checking out CoinMarketCap.com, the current crypto market cap sits at 3.34 trillion. The all-time high is 3.75, so we're about a half a trillion off. And the Bitcoin market cap is back above 2.1 trillion. And we have 114 billion worth of volume for the past 24 hours. Bitcoin dominance, 63.2%, with Ether dominance on the rise again at 9.5%. Checking out top 100 crypto gainers past 24 hours. We got Sky leading the pack, up 12.5%, followed by WIF, up 12%, followed by SPX, up almost 11% on the day. Let me know which alt, if any, you're bullish on for the bull. And checking out the crypto bubbles, you can see for the daily, bulk of the market in the green. We love to see that. Zooming out for the weekly, unfortunately, majority of the market wreck city. And zooming out for the monthly, bulk of the market in the green, which we love to see. And checking out the crypto greed and fear index. Today we're 64 greed, yesterday 64, last week of 74, and last month of 64. And let's check out the time chain calendar. I forgot to pull it up, so let me do that right now. And shout out Steve, I greatly appreciate the super brother. Can you start your own platform or website? That's a great question. The answer is yes, of course I can create my own website or platform. However, it doesn't mean anyone will be using it. The thing with social media, there's already billions of users you can just plug into. So the silver lining, we will resume the live streams on X and Rumble. I'm just not holding my breath that I'm going to have a YouTube channel moving forward after today based upon the attack, which is playing out in real time. But according to the block height, we're currently on block number 899,690. We have 150,310 blocks into the halving of 2028. And as of today, you can exchange exchange one fiat monopoly dollar for 944 sats. So you know what to do. Pick up the sats, put down the gats, pick up some Bitcoin caps from my man Sergio over at bitcoincaps.net. But let's continue. Let's do a little TA, aka astrology for the baddies, and you should be able to see on your screen. We're going to run through this quickly. Bitcoin taps 106 liquidity as the bulls defend the price with $260 million bid. That's right. Here, looking at a 1 hour chart, and I'll pull up the live charts here shortly now that we're back in the green. Major liquidity zones above 110 and below 103, according to the Bitcoin liquidation heat map. And quoting material indicators, fire chart showed 263 million in bid liquidity for the biddy, ladder down to 97,750, and an additional block of plunge protection just above the yearly open. Any significant additions of bid liquidity to this expanded range should help keep the price elevated and the macro trend intact. So profit taking euphoria still absent, which means the whales are continuing to accumulate, which is what the smart money should be doing right now. Fewer than 8% of the trading days have been more profitable for investors, suggesting a meaningful transition into profit taking activity underway. But again, smart money knows better, but I mean, be my guest if you want to sell to the likes of BlackRock, 21, and Mikey Saylor. Glassnode added that despite hodlers cashing out, the market had not yet reached the kind of euphoric state seen during the previous long-term price tops. And there you have it. And I'm going to pull up some of the live charts. We'll do a little live chart action. Jackson, Satisfaction, Bo Jackson, Tony Braxton. Really quick. You should be able to see on your screen here, family. We do have a lot going on the 1 hour. We do have a rising wedgie, the only wedgie I approve of. We do have a bull target in the green, sitting at 109. It's an inverted head and shoulders in particular. And zooming out from the hourly, let's take a look at a 1 or 4 hour, and then we'll work our way backwards. 4 hour chart. Also shows a bullish pennant formation, also a bullish pennant target of 116.3, again on the 4 hour chart. Again, 116.3 in play. 112 is the current all-time high achieved May 22nd, which was roughly 2 weeks ago. It's the current top, hence price discovery. Checking out the daily, looks like no particular bull scenario targets here, but you do see we've been trading sideways for the past week, really. But bullish momentum seems to be resumed here overall as we continue to accelerate. Zooming out, taking a look at a weekly, cup and handle target, rising wedgie, 124 in play. We've seen this in play on this particular chart for at least 6 months now, hoping it comes into fruition sometime here soon. But you guys let me know your thoughts. And we had 7 consecutive green weekly candles, and we finally had a red corrective just this Sunday a couple of days ago. Will the bullish trend resume? You guys let me know your thoughts. And zooming out a little from there, take a quick look at the monthly chart. And as you can see pulled up here, the month of May was a nice green close, and April was green. The 2 prior months prior to that was in the red. But you let me know where you feel will likely go for this month. I think the bull is going to resume, especially considering where we're at, considering the distance apart from the previous halving, which was in April of 2024, typically 12 to 18 months out is pure bullishness. Here's the latest from Tether, USDT. There's actually an interesting headline. Tether just moved almost $4 billion worth of Bitcoin into 21 Capital. That's right, Jack Mallers' new company, at least he is the CEO of. Check this. Tether just moved a combined 37,229 Bitcoin worth $3.9 billion to an address linked to the new Bitcoin native financial platform, 21 Capital, led by Strike CEO Jack Mallers. Now, the Tether CEO posted 2 transfers totaling 11,417 Bitcoin worth $1.2 billion, according to the recent X post. In one transaction, the stablecoin issuer transferred 10,500 Bitcoin worth $1.1 billion to an address linked to SoftBank's investment option. In 21, the executive said it was a part of the pre-funding of SoftBank's investment in the Bitcoin platform. In another post, the Tether CEO said Tether made a separate 917 Bitcoin transfer to a wallet associated with Convert Investment investors holding equity rights in the venture. The coins were worth about 96 million at the time. The largest batch was moved a day earlier when the CEO reported 3 transactions totaling 25,812 BTC, worth 2.7 billion at the time. That included a 7,000 BTC transfer worth more than 730 million from Bitfinex as part of the investment into 21, followed by a 14,000 Bitcoin transfer from Tether, and 4,812 Bitcoin worth $500 million, representing pre-funding for the initial equity raise. 21 Capital aims to develop Bitcoin native capital markets infrastructure, allowing products like lending, custody, and asset issuance to operate directly on the Bitcoin rails. It plans to go public via a special purpose acquisition company merger with Cantor Fitzgerald's Cantor Equity Partners, which values the company already at 3.6 billion. 21 is already the 3rd largest corporate holder in the world, and they just fucking launched. Let that sink in. Trailing behind Strategy and Bitcoin mining firm Mara Holdings. The high-profile transactions also highlight a growing divide in the crypto industry's approach to transparency. At the Bitcoin 2025 conference in Vegas, Strategy Executive Chair Mikey Saylor said that posting on-chain proof of reserves is a bad idea. Then guess what? Jack Mallers the next day or so came out and said, you know what? I think it's a good idea. For 21, we're going to post the address and the proof of reserves. Let's go figure. Despite Saylor's commitment to privacy, blockchain analytics firm Arkham already attempted to identify the company's wallets. In fact, they allege to have found 97% total now of Strategy's Bitcoin on chain. So lo and behold, Saylor don't want to share it. Well, too late. Thank you, Arkham, is what it is. Here's what happened with James Nguyen, the high leverage trader we've been covering really closely for the past couple of weeks. New headline just printed here. James Nguyen's second 100 million Bitcoin bet, and even says they're hunting me. That's right. Multimillionaire crypto trader James Nguyen, the legend himself, opened a second leveraged Bitcoin position for nearly a short 100 mil, just days after being liquidated from a similar trade. According to blockchain, the position is set to be liquidated if Bitcoin falls below 103 and is currently showing an unrealized loss of 592,000. I guess that was before this morning's pump, so he's probably in the green right now. The trade comes less than a week after Nguyen's previous 100 million position was liquidated May 30th, when Bitcoin briefly dipped below the 10-day low of 105. Nguyen's bet coincides with growing market caution. Bitcoin's next significant support remains just above 103 as market participants remain in wait-and-see mode ahead of the release of the key U.S. jobless claims report June 5th. Nexo Dispatch editor shared, and following the news of the second bet, Nguyen alleged on X his liquidation level is being deliberately targeted by major market participants. Not surprised. Now, the problem is it's all being done publicly, and the market makers have every interest, you would think, to liquidate him. And it seems people that don't like him are going to do everything in their power to make sure he gets liquidated as well. There's always manipulation in the markets. Quoting him here, "They're coming for me again," he wrote, disclosing his 103 liquidation level in the post. "Don't let these evil bastards liquidate me." And if you want to help him not get liquidated, long Bitcoin. Meanwhile, crypto influencer altcoin Gordon called out the market manipulation after Nguyen's second 100 million bet was initiated. Within seconds, the shady market makers dumped the price towards his liquidation price of 104.5. So my understanding is when there's lots of leveraged longs, the market makers are going to make the market price lower to liquidate those positions and vice versa. And it seems the market maker's always going to win regardless. Some traders have started donating to Nguyen's blockchain address. I did see that. I think he already received over $1 million of donations. I still think that's crazy. People are donating to him because, I mean, he brags about being extremely wealthy. And if he's throwing hundreds of millions of dollars into leveraged longs, you would like to assume he's a billionaire, or if not, worth hundreds of millions. So if you're not worth $100 million and you're donating your money to this trader, I think it's a little retarded, but then again, that's just my personal 2 Satoshis. At least 24 blockchain users sent stablecoins to Nguyen's crypto address, with the largest. So if you want to help him, I think you should just create your own Bitcoin long. Avoid the 40x leverage because you're almost guaranteed to get liquidated, but just go long on Bitcoin. You want to support Bitcoiners, you want to support Bitcoin, you want to support Nipinator, and you want to support the trader at the same time versus just blindly donating money, which you no longer have access to for some leverage gambling at the end of the day. That just makes more sense to me. But anyways, he previously asked the community for stablecoin donations to fight the market-making cabal, promising to reimburse each user, assuming he wins. He also claimed that some of his personal accounts on crypto exchanges were closed overnight for no obvious reason. As he wrote here, bearish momentum is weakening on the 8 12-hour candles for the biddy. Everyone will be caught off guard. The pumps will be ferocious. When Bitcoin moves, it moves fast and hard. Now, bearish momentum is weakening. Amen. And speaking of bearish momentum weakening, what greater picture could have appeared at that very second than the Peter Schiffmeister, the biggest Bitcoin troll, and the worst financial advisor in human history, maybe minus Jim Cramer. But for whatever reason, Peter Schiff can give investment advice on his YouTube channel to keep you poor. Jim Cramer has the okay to give you investment advice to get rid of your Bitcoin position so you could remain poor. But I'm being attacked for being a Bitcoin advocate and allegedly promoting an illegal Ponzi scheme. You can't make this motherfucking shit up, broskies. Let's continue with the news. We covered the latest with James Nguyen. Now the latest from Michael Saylor, already raising more money to buy more Bitcoin, even though he just made another announcement yesterday of a new acquisition. Well, they're already raising more as per the headline. Saylor Strategy offers 250 million preferred stock to buy more of the biddy. That's right. MicroStrategy plans to raise $250 million through an initial public offering of a new class perpetual preferred stock so it can fund more biddy purchases. Strategy intends to issue 2.5 million shares of the 10% Series A perpetual Stride preferred stock with the ticker STRD at $100 per share. The Bitcoin stacking firm just said in a new statement, proceeds from the offering will be used to acquire additional Bitcoin to provide working capital. Perpetual preferred stock often pays fixed dividends indefinitely with no maturity date and typically has priority over the common stock in payouts. Strategy's perpetual preferred stock offering will be available to institutional investors and selective non-institutional investors, as they outline right there. The offering would allow to add new fundraising tools for Strategy to fund the Bitcoin purchases, which have primarily been facilitated through issuing common stock and convertible notes. Also, Strategy is by far the world's largest corporate Bitcoin holder, currently with 580,955 biddy, worth $61.7 billion on the balance sheet, according to the site. BitcoinTreasuries.net shows Strategy's Bitcoin holdings are more than double that of the other 117 publicly traded Bitcoin holding companies combined. The 250 million could allow Strategy to purchase another 2,351 Bitcoin at the current prices, with Bitcoin trading above 106. Strategy's executive chair and co-founder Saylor has been the main orchestrator behind the company's Bitcoin investment strategy. STRD holders are eligible to receive 10% annual dividends in cash, but only if declared by Strategy's board or an authorized committee. The dividends are non-cumulative, meaning unpaid amounts don't carry over to the future periods. If declared, STRD dividends would be paid out on the last day of each financial quarter, starting September 30th, 2025. Strategy can redeem all outstanding STRD shares for cash if less than 25% remain from the total originally issued. If a fundamental change occurs, STRD holders can reacquire Strategy to repurchase their shares for cash. In both cases, the repurchase price includes a $100 liquidation preference plus any declared dividends that haven't been paid. Wall Street banks Barclays, Morgan Stanley, Moelis Company, and TD Securities will manage the sale of STRD. And several investment firms, including the benchmark company Amar Yvette Securities, will support the offering. The offering is being conducted under the effective self-registration statement followed by the U.S. SEC. So Saylor done figured out another way to raise more money to buy more Bitcoin. Not surprised. All right, next story. We got 2 more stories to go, bros. We got retail buyers. Here's the latest. And then big news coming out of Russia, and Max Keiser shared some insights that they have the first movers advantage to buy 1.5 million Bitcoin for the United States. And there's only enough Bitcoin for one Bitcoin superpower nation. So we'll be discussing that, and then we'll do our live Q&A. But as you can see, retail is so back, but not where you think. Let's break her down. Let's see where they're hiding. Despite the widespread belief that the retail investors have exited the crypto space, that's not the case. According to Vugar Usizadeh, chief operating officer of BitGet, they've simply changed their approach. In a new interview at the Consensus Conference in Toronto, Canada, he explained that retail trading has shifted away from the rampant speculation and towards the more practical, sustainable use cases. He attributes this change in part to the lingering PTSD from the last crypto market cycle. Let me know if you have PTSD from crypto, bros, as well as the broader macroeconomic uncertainty fueled by the Trump admin, which has placed downwards pressure on the risk assets throughout the year. Quoting him here, retail investors' appetite for the risks is much lower because we know what happened with the stock market and every other aspect. There's less disposable income to play around with, but people are becoming smarter with their investments. BitGet is responding to this behavioral shift to expand into crypto payments and utility-driven services, including BitGet Pay and stablecoin solutions. The fallout from the 2021 bull run, followed by the harsh bear market and high-profile collapses, has driven users to seek safer, more functional applications for their crypto holdings. Quoting him again, several exchanges are tapping into the payment processing market through crypto, which brings us more towards retail use and everyday spending habits rather than just earning or trading. He also emphasized the growing role of decentralized exchanges, which now account for nearly 10% of the crypto derivative market. These platforms are attracting users who want early access to tokens that are not available on decentralized exchanges. People still want to do these big things, he said, but not necessarily within the formal arena. BitGet emerged as one of the largest crypto exchanges with more than 3.4 billion in average daily volumes as of May 31st, and over 800 cryptos are listed, which ultimately means they're a shitcoin casino. I mean, got to say it for what it is. The evolution of the crypto market likely marks the end of traditional boom and bust cycles, dependent on or defined by euphoric rallies and prolonged crashes. Since the last cycle, clear-cut bull or bear markets are unlikely to materialize and instead will experience bull episodes and bear episodes. Also pointed to Bitcoin as the crypto's industry's biggest outlier, trading in what he described as its own free flow. That's right, Bitcoin's on its own vector, its own trajectory. I agree there. This dynamic carries both advantages and risks from the crypto investors. I'll take the risks, I'll double down on the volatility. Bitcoin going up forever, Laura. Just saying. He also says, therefore, it's a very interesting place to be. And I think as an exchange, we're trying to reinvent ourselves. First, with all the regulations and the KYCs, we are becoming more of a bank-like organization. And speaking of banks, you know, Saylor's intent and mission has become the largest Bitcoin bank on the motherfucking planet. But you already know. Now for our feature story of the day. Russia's largest bank, Sber, offers up Bitcoin-linked bonds. This is big news, yo. So let's share the significance of this. Also, your high priest, Max Keiser, wrote, what if Russia suddenly realized they have a very high strategic advantage and could buy 1 million Bitcoin faster than the US and win the global hash war? Incredibly cheap energy costs, number one. Number two, extremely low debt of 14.9% to the GDP. And number three, the ability to print their own currency. Issuing $100 billion in BitBonds is easy for Russia. Buy 1 to 5 million Bitcoin, no problemo. Your high priest has spoken. Shout out Max Keiser. Now, check this out. Max also reposted this post, and it's very powerful. Russia just state-sanctioned a parallel capital architecture. Sberbank's structured bond isn't a marketing gimmick. It is a test deployment of sovereign-compatible Bitcoin integration within Russia's legal perimeter under its currency and without violating capital controls. This is the first real example of a nation-state formally embedding Bitcoin into its domestic bond issuance structure, using it as a performance anchor without needing to custody or declare reserves. And here's why and what this really reveals. Number one, Russia is operationalizing Bitcoin as an escape hatch, not by holding it, but by tying the future value to it. They're not stacking the biddy. They're pricing their debt against the pretty low biddy going up forever, Laura. And number two, Bitcoin is becoming a sovereign benchmark. Preach. This is exactly what gold used to be. A hedge against fiat. I call it retardation, inflation, geopolitical collapse. Now Bitcoin is becoming that without needing the global consensus, just exposure. And number three, it mirrors what the U.S. is doing strategically, but silently. The U.S. strategic Bitcoin reserve is real. Trump is friendly to Bitcoin and the dollar system is creaking. So what we're seeing is two nuclear powers racing to co-opt Bitcoin without admitting they need it. The contrast with China is now stark. Number one, China bans Bitcoin outright again. And two, Russia builds Bitcoin structured sovereign instruments. That divergence is not temporary, it's ideological. China wants full surveillance, the digital yuan. Russia wants parallel capital options for the sovereign defense. Bitcoin sits at the intersection and is now being weaponized as a neutral hedge by both friend and foe of the West. What this means for the global system: number one, we're in the early sovereign derivative phase of Bitcoin monetary integration. Number two, reserve grade status is no longer theoretical, it's being tested in the debt markets. And number three, the illusion that Bitcoin is retail speculation is now permanently broken. That's right, all your models are broken, I dare say. This is the birth of Bitcoin's role in the post-SWIFT monetary architecture. Take that, legacy payment rails. And now for the final truth. Russia just fired the first monetary shot, bang, bang, in the realignment war by not buying Bitcoin, but by pricing its sovereign future alongside it. This is no longer about the pretty little bitty price. This is about the pretty little bitty as a structure. And the deepest truth, you ready for this? The sovereigns who integrate first will survive the collapse of belief. The ones who ban it will watch their systems fracture when the real shock hits. Can I get a mic drop? And massive shout out to site bringer The Prophet for this post. Right on the money, hence why you got reposted by your high priest, Max Keiser. Now let's dive a little deeper into the particular here. Russia's largest commercial bank, Sber, which rhymes with money printer go Burr, has launched the Bitcoin-linked bond product tracking crypto changes in price to the dollar-ruble exchange rate. That's right. The product is already available to the qualified investors in the over-the-counter market. The Sber plans to list the product on the Moscow Stock Exchange in the future. The company formerly known as Sber Bank said in their statement, the listing will ensure transparency, liquidity, and convenience for the wide range of qualified investors. Sber said the structural bond could allow holders to earn income from the change in the dollar value of the bitty and the strengthening of the dollar against the Russian ruble. Well, that's right, fam-a-lam. The bank said that all the transactions are carried out in rubles with Russia's regulatory framework, so investors don't need to rely on crypto wallets or unregulated platforms. Sber said it would also offer exchange-traded products, ETFs, providing exposure to crypto on the Sber investment platform, starting with a Bitcoin futures product, which the bank said would be listed June 4th, which is tomorrow. Once the Moscow exchange officially launches the product, Sber's move comes as Russia's central bank permitted financial institutions to offer certain crypto financial instruments to accredited investors May 28th. However, a key stipulation of the Bank of Russia's announcement was the financial institution could not offer cryptos directly, so indirectly, so be it. The Moscow bank T-Bank, formerly the Tinkoff Bank, interesting name, rolled out the investment product tied to the bitty price on the same day, referring to the product as a smart asset that is issued through the Russian state-backed tokenization platform Atomize. The central bank reported that the Russian residents hold around 827 billion rubles, which is 9.2 billion USD worth of the crypto on centralized exchanges. In its review of the first quarter of this year, inflows into the Russian crypto platforms also rose 51% to 7.3 trillion rubles, which is 81.5 billion USD over the same time frame. And Bitcoin holds a 62% share in Russian crypto exchanges, followed by Ether at 22% and stables like Tether and USDC. And if you don't know, now you know. Let me know your thoughts on that. We're going to transition, end the YouTube stream, and continue with the uncensored version of the pod on X and Rumble. So if you're on YouTube, you ain't got to go home, but you need to get the fuck out of here. Just saying.